If you take accounting, actually there are two main types of accounting. There is something called financial accounting and there is something called management accounting. So what's the difference between this financial accounting and management accounting? So if you take financial accounting, as we learn, in financial accounting what we are doing is, whatever the thing happen, we will be recording it. So if there is a sales transaction of 100,000 US dollars, we will be recording it. If there is a purchase transaction of 20,000 US dollars, we will be recording it. If there is a certain expense for 5,000 US dollars, we will be recording it. So in financial accounting, simply what we are doing is, whatever the thing happen, we will be recording it. So that's financial accounting. So what is this management accounting, or we will call it as managerial accounting? In management accounting, what we will be doing is, using the data of the business, we will be predicting for the future, we will be forecasting for the future, and we will be taking other assumptions also into the equation when we are making the predictions. So what is an example for this? So like preparation of the budget. If you take any business, for the businesses, they should have a budget. Budget is something like planning. That means for the next year, how many units of product X that we are going to sell? What's my purchasing cost should be? For this relevant expense, how much am I going to spend? For my labor, how much am I going to spend? So this idea you should have as a business. Before heading towards to a new year, you should know, okay, how much should be my sales? How much should be my labor cost? How much should be my purchasing cost? As well as you should be able to do proper forecasting, predictions. So I said you, as a business, you should know, okay, next year, after that, or for the next month, second month, third month, what should be your sales, or what can be your sales, the prediction. So these things will happen in management accounting, not in financial accounting. In financial accounting, what's happening? Whatever thing happened in the past, you are recording it. But management accounting, not like that. Using the past records and using some other information, we will be predicting, we will be forecasting for the future. Apart from that, we will be doing costing in management accounting. So you want to calculate cost per unit. So how to calculate this cost per unit? Let's assume, as an example, you are producing and selling tables. So if you are selling wood tables, let's assume wood tables. So if you are selling this table, you should have a selling price. No? So how are you going to determine the selling price for this table? So in order to determine the selling price for the table, you should know the cost. So how are you going to calculate the cost? Is the calculation of the cost is there in financial accounting? No. In financial accounting, what you are doing, just whatever thing happened in the past, you are just recording it. But in management accounting only, you will be doing those kind of costing. So likewise, there are certain differences between financial accounting and management accounting. So as I said you, if you take financial accounting records the past transactions, whereas management accounting, using the past records, predict and forecast for the future. So how much will be my sales for the next year? How many units will I sell for the month of January? For the month of February, how many units I will be able to sell? For the month of March, how many units I will be able to sell? So this prediction will happen in management accounting, not in financial accounting. And next one, if you take financial accounting, there is a set format to prepare the financial account. So if you know, in financial accounting, you have to prepare financial statements. So if you take income statement, if you take balance sheet, if you take changes in equity, cash flow statement, in order to prepare these things, there is a set format. As an example, if you take income statement, you can't start the income statement from cost of sales, no? Your first line is cost of sales, second line is sales. You can't do like that, because there is a set format. If you are preparing the income statement, you have to start with sales. So that is financial accounting. But in management accounting, it's not like that. You can use any method that you want. Any method. Whatever the method convenient for the company can use that method and prepare the management accounting. Because management accounting is something which is provided for the management to take decisions. Why we are preparing management accounting? Management accounting, we are preparing for the management of the business. We are not giving it for the outside parties. So if you take financial accounts, we will be giving it for outside parties. If outside parties want to take decisions, we will be providing these financial statements. So they can go through these financial statements and they can take the decision. So if you are providing these financial statements, all the companies should have a proper way of preparing the financial statement. The uniformity should be there. So for the financial statement, there is a proper format. All the companies should adhere that format. But management accounting, we are not providing for the outside parties. Management accounting information will be used by the managers in the business. So they can prepare whatever the information that they need as they want. That means there is no proper set format to prepare the management accounting. But there are certain recommended formats. Those things you will be learning later on. What are the recommended formats when you are preparing the management accounting? So that is the second one. Any format can be used, preferred by the company. And next one, summarized. And management accounting is detailed. If you take financial accounting, whatever the financial statements that you are providing, it is summarized information, right? So if you take sales, you will provide, okay, sales of the company is $100,000 sales of the company is $100,000. That's the only information that you are providing. But in management accounting, it's not like that. When you are taking decision, you will take more detailed information. Okay, how you got this $100,000 sales? How you got it? From product A, 50,000. From product B, 20,000. From product C, 10,000. From product D, another 10,000. Likewise, when you are preparing the management accounts, you will be taking this in detailed information. So I know, okay, out of these 4 products which I am producing in my company, product A is generating me a higher sale. So management can take a proper decision. Okay, that product is a good product sometime. So we'll give our more focus for that product. I'm just telling as an example. So you can take a better decision, right? Because you have in detailed information. So this in detailed information will not be provided for other people who are using the accounts. Management accounting will be used by management. So they'll be taking detailed information for them to take better decision. Whereas financial accounting, you will be just providing the summarized information, as I said. Just sales, 100,000. That's it. How you got that 100,000? From product A, how much? From product B, how much? Nothing is provided. So that's another difference. And next one, prepared mainly for the external users and prepared mainly for the internal users. As I said if you take financial accounting, mainly prepared for the external users, like for the shareholders or investors, existing shareholders, existing investors, because they want to know whether the company is doing well or not. And for the future potential shareholders or future potential investors, the people who are expecting to invest in this company. So for them, we have to provide this information. So for them, we will be providing financial statements only, not management accounting information. So normally financial accounting is for the external parties. If you take management accounting, it is for internal parties, like management, managers. For them to take better decision only, we will be using management accounting. Management accounting will not be provided for the external parties. And next one, generally prepared for 12-month period. Management can decide how regularly should be prepared. So if you take financial accounting, normally financial accounting, those financial statements will be prepared for 12-month period. If you take an example, income statement will be prepared for 12-month period. If you take balance sheet for a certain particular day, it will show you how much asset company has, how much liability company has, how much equity company has for a certain particular day. So normally financial accounting will be prepared for 12-month period, but management accounting not like that. In companies, sometimes they will prepare this management accounting every month. They will do it every month, sometimes every quarter, sometimes once in 6 months. So company can decide how regularly they are going to prepare these things. So it's up to the company. So that's another difference between financial accounting and management accounting. So I hope you got a clear understanding of the difference between financial accounting and management accounting.